Hey guys and gals, this is Blake Morrow, and you were listening to the daily Roundup webinar. I hope everybody's having a great trading session. And we're seeing a little bit of selling coming into the equity markets. I was actually just looking at the dollar, the Euro Mexican peso, and I was going to pick it up if we breach this resistance, and I'll tell you why. First of all. And I didn't, just so you guys know, I did not do it. But I've been looking at this pair quite a bit, and you can do the same analysis on the U.S. dollar Mexican peso, which I'll do here in a bit. But I'm thinking we might have a little false breakdown. One of the reasons why I'm feeling that way is the U.S. dollar Mexican peso almost hit that 127% extension of this last range that I've been mentioning. We came really close. We hit a brief new low. You can see that brief, there you go, you can see it. Maybe if I can zoom a little bit. You can see it, we hit a brief new low, and then we start to rally. And, the information just came in about, the Ukrainian plane that was down by the missile strike. My working assumption is that plane was probably just caught in the crossfire, right? They sent off a bunch of missiles, to hit our bases, and you had a plane that happened to be midair and got struck and went down. That would be my initial thought. It wasn't really targeted, but you never know. If it comes that it was actually targeted, maybe there's going to be a little bit of a response. The market, I think it's kind of taking it in stride, but still you can see the equity markets, you're seeing a little bit of profit taking. So with a little bit of profit taking, you get a little Mexican peso weakness. You notice I've been focusing a lot on the peso, and that's because when we're in search for volatility in the FX market, when you have the euro in a 20 pip trading range, you kind of got to look at different things, and the peso is one of those that does give us some volatility, and so that's why I tend to focus on it a little bit more, and have been over the last. Well, I've actually been trading it quite a bit over the last few years, but really the last couple months I've been looking at it quite a bit, and so. Anyway, and it usually suggests that there might be some risk aversion if it's going higher, and that's one of the things that I'm looking at right now. As I see it moving up, and I'm like, okay, I see that moving up. I see the euro is coming off the lows. Also, challenge support. This is the bottom of the support zone. I've had this support zone in the euro drawn here for, I want to say, arguably months, maybe weeks, but I've been doing with this the support zone is doing this the whole time. Let me move this over. All I've been doing is this the whole time. Every time we're at it, we challenge it. I'm like, okay, there it is. It's significant again. And I think I had it out like this because we hit it, bounced off it, came back, retested the bottom end of it, and then here we are today, bouncing off the lower end of that zone. Now, does that mean that this is the bottom in the euro? I would say no, probably not. Well, we don't know until tomorrow, but tomorrow we do have non-farm payroll. I am long a little bit of euro down here because of where we're at. I had got stopped out overnight. And then I reestablished my position lower than where we're at right now, way earlier this morning. I'm kind of sitting in it. I don't plan on being in it going into tomorrow, unless for some reason the euro just rips past the 30s, and we start heading back up here, and then we're up here by the end of the day. I might just move my stop to break even and just sit in it going into tomorrow's non-farm payroll, just in case we have a weak number and it rallies. But if we hang out in the teens or 20s, I'm probably not going to stick around. I'll probably just go into tomorrow flat dollar pairs. Now, speaking of dollar pairs, let's talk a little bit about the dollar Canadian. Whoops, here's the Canadian. The dollar Canadian rallied quite significantly. If you've been listening to the FACE webinars the last several days since Monday, I gave you the scenario when we were here. I said, look, you know, the dollar Canadian could be a really good short if we make it all the way back up to 131. And if I went back and listened to the recording from earlier this week, which you guys can go ahead and do so if you really want to, I think I said, I think you'll get back to 130.50 and we'd be really lucky if it got to 131, right? And I was thinking, well, you know, ahead of the non-farm payroll, and I drew it all out for you on the charts. I said, ahead of the non-farm payroll, we get up here and then we pull back a little bit. And then if you have a position, no matter if you're long here or short here, but if we're, you know, trading at 130.50, you know, hopefully you're in a, you know, good enough position to hang on to it through the jobs report. Again, I don't have a position right now. I did short the dollar Canadian up here, just took a few pips out of it. It was one of those I didn't want to really stick around because I'm long Aussie Canadian. So I didn't want to, you know, totally hedge my position right now because I'd rather be directional in Canadian weakness. So anyway, that it did rally to where I thought we were going to get is 131. Now the question is, you know, do we pull back or how much do we consolidate ahead of tomorrow's jobs report? My assumption would be this: if I can imagine what happens tonight and tomorrow in Europe before the jobs report, we do this. Okay. And we might end up being right where we're at for the Canadian jobs report tomorrow. Remember, if that Canadian jobs report does come in weak, well, I say remember because I actually tweeted about it, then we're going a lot higher. This is a very impulsive move. You know, and especially if we get a strong US jobs report and a weak Canadian report, I mean, you know, boom, this thing's going to go, you know, this thing's going to, you know, rip up to 130, 150. Now, the flip side to that is what I had mentioned to you guys this morning is that the Canadian jobs report, even though, and I showed you this, oops, sorry, I was looking at something else. I was looking back into February. Let's go into, nope, back a month. Tomorrow's jobs report for Canada specifically, you know, I was looking at and referencing all these down months. Every time you have a big miss, then you get a, you know, bounce back in jobs. Most of the time, almost every time. This one, we had a big miss back in February 2018, and the next month we came short of expectations. We did have a big miss last month. Could we fall short of expectations? Sure. But most of the time when you have a miss, you get a beat, outsized beat on the other end. Same here, same here, same here, same here, same here, right? That one came in line. This one, okay. So most of the time, I would say probably majority of the time, if you get a miss in Canadian jobs, a big one like we saw, the next month it's going to revert back to the mean. So we should get a strong jobs report. I will warn you, if it is a weak jobs report, and especially if the U.S. jobs report continues to be, you know, employment numbers continue to be strong, which, you know, I don't see any reason why they would change course right now, then the dollar Canadian could very well be way up here by tomorrow. So just think about that, guys. I don't want you to, you know, be like, oh, Blake's bearish the dollar Canadian, you should be shorting it here. No. I think it's rallied for a reason. And now you have to be very careful. I think tomorrow morning, if after the jobs report, if we rally past 131, let's just call it like 131.20, you know, somewhere up here around the 78% retracement, yeah, we're probably going to continue to squeeze pretty hard. That's what I'm going to be looking for like a FOMO trade, which I don't like to do FOMO trades, but in this case, there's a reason for it. If I have to chase something higher, I'm going to do it here because I think the market got pretty short the U.S. dollar Canadian coming through this big triangle, all right, big multi-year trend line. And the worst thing for a dollar Canadian bear could be reverse out of this triangle lower and then do a false breakdown, and then next thing you know, we'll be trading up at 138 in the next few months. So that would be the worst case scenario for a dollar Canadian bear. Now that's the CAD. I also want to talk a little bit about the yen. I mentioned it earlier this morning, and if you guys missed that, I'm looking for continued strength in the dollar yen as long as stocks continue to go up. Now stocks are rolling over, and Peter said, "Great call on the dollar yen continuation, Blake. I'm out, but looking to re-enter." Thanks. I as long as stocks continue to go up and we continue to target that 3,300 level in the S&P, I think the dollar yen can continue to go up because yields are going up, right? And gold's going down. So those are the ingredients you really want to have a continuation higher in the dollar yen. All right, that would make sense. The downside to that is if the S&P actually does roll over. If the S&P does roll over, then we're going to have a little bit of a problem because that means the dollar yen could not. This is like a wall of resistance, and that's going to be a problem for anybody who's bullish right now. But the good news is I think dollar yen longs have momentum on their sides. We're above the 200-day moving average. We had this little false breakdown outside of this channel. You could say, arguably say false breakdown below this, these lows right here. And that has, really given the dollar yen a boost. And one of the things that I didn't do yesterday, which I should have, because I'm sitting here looking at the daily chart and I was thinking this, and I just was too big of a wussy to do it. I said, man, that is a big false breakdown. This is following that missile strike and, Trump, kind of de-escalating the situation. So big false breakdown. I knew today would be an up day. And I mean, I knew it inside. I just didn't act on it, and there's a lot of those situations that, I get into like that, where I knew it was going to, and I didn't. I knew in my, in my gut that it was going to happen, and I just didn't take advantage of it. And I try not to beat myself up about those types of things because there are reasons why I might have missed it, whether it's I wasn't looking at it at the time. I was like, oh crap, I can't get a good entry, but I felt very strongly that we were going higher, especially after an outside day like that and a false breakdown. I knew that today would be up. Question is, how far are we going to go? And, I still think that 110 is within reach at this point. Let's see, anything else I really, really wanted to hit with you really fast? Talk to you guys real quick. That's right off the top of my head. Since we're talking yen, look at the euro yen. Now this is something, right? And I'm going to leave you with this. So we had this double top, right? This big double top. And just so you know, I shorted the euro yen and I got stopped out. So I got literally stopped out at that high right there. That's how crappy I traded this. But double top, I tried to short it right here. I put my stop way too tight. I got hit. But we were trying to complete. Then the missile strike, it reversed. And now we have a double bottom. And the double bottom, if it plays out, can play out all the way to 122 and change. Think about that if stocks continue to go higher. If stocks continue to go higher, maybe that will be a situation. But I'm looking at the S&P right now. It's not looking too terribly pretty. So just something to think about. So guys and gals, if you haven't had a chance, make sure you try out ForexAnalytix. It's the platform where you're going to find myself and many other traders chatting throughout the course of the day. That's where I'm at, in between webinars and in the evenings, and you can go to the chat room right here. And I want to thank you all for listening in. Remember, we don't broadcast this specific webinar on Friday. Okay, so we don't broadcast this on Friday, so you won't see it tomorrow, but I'll see you on the Face webinar tomorrow morning. So guys and gals, my name is Blake Morrow. Have a great one, and we'll talk to you